Great, thanks so much. Super excited to be here today. Thanks to OIS for inviting me. What I was going to do in the next 10 minutes is give you a sense of what we're seeing in the private venture financing side for healthcare, both on the dollars being invested, where they're being deployed, as well as a little bit on the M&A side. And so I'm John Norris. I'm with Silicon Valley Bank. Sort of think of SVB, Silicon Valley Bank, as niche-focused company looking to work with companies on the ventures that are looking to raise money from idea on a napkin all the way up through venture funding in public. We love working with all those companies on the commercial banking front. So I put together a paper every 6 months looking at the trends. And so what I thought today is to give you a sense of what we're seeing in the market and leave you with some perspectives and predictions as to what we see in 2023. So with that, let's hit the first slide. This looks at venture fundraising. We look at every single venture fund that closes on a yearly basis and we say, do they invest in healthcare? And if the answer is yes, what percentage of that fund do we think they're going to be investing into companies in the healthcare? And so those are the numbers that you see in this slide. And what's amazing is 2021, we see just a tremendous amount of venture capital being raised. And just sort of think about that as these funds, as they raise, are going to be deploying those dollars over the next, let's say, 2 to 4 years in new companies, and then supporting those companies over the next 6+ years. So $28 billion in 2021. In 2022, we really thought that those dollars were going to retract because everyone who we thought was out there fundraising had already closed. But the first half of the year, we actually saw an increase in fundraising. Now that's declined in the second half of this year. We've all kind of understood we're in a little bit of a downturn. And so that number is probably going to be around $22 billion for the year. But regardless of that, $44 to $50 billion over the last 2 years to be deployed in new healthcare companies. So that's a tremendous amount of capital looking to be invested in private venture-backed healthcare companies. And so are they seeing that investment? If you look at 2021, record amount of investment in the US and Europe into these companies at $92 billion. And 2020 was the record before 2021 came about. But if you sort of think about 2019, 2018, the 2021 numbers were about 3x what we saw in 2018, 2019. Then 2020 was the record. 2021 crushed that record. 2022 is actually a pretty solid year, although we definitely see in Q3 less investment. And so you can see really being led by health tech down 57% from Q2 to Q3. Biopharma down a little bit. Device is actually up. But what we're seeing is investors not deploying as much money because they have kind of a paralysis in two ways. One, they have to figure out what to do with their existing portfolio. Do they need to finance? How much money and how much cash burn do these companies have? What do we need to do? Do we need to think about pivoting? Do we need to cut back, et cetera? And then two, on late stage investing, how are they going to deploy those dollars? How do they figure out valuation? That's the big issue because a lot of these public companies have lost so much market cap recently. How do they figure out the right valuation? And so, with that, you look at early stage, seed, Series A, and the yellow dotted lines just sort of shows the trajectory. And I think the point of this slide from my perspective is to say, yes, dollars are down in early stage, but not really that significantly. And they're all about on the pace of 2020. So there's still a lot of investment happening in the early stage. So let's transition over to biopharma. And if we think about it, the slide got a little bit jumbled here, but in Q3, dollars are down a little bit, really a function of what we saw over 2020 and 2021 were these really large rounds with crossover investors, then transitioning into quick IPOs. That activity has declined significantly. Where you were seeing 15, 20, 30 of these deals a quarter, now it's single digits. And because of that, we're seeing less investment. Over on the ophthalmology side, however, we actually are seeing more and more investment into the sector, which is great to see. $437 million in 2019. In 2022, we're already at $1.3 billion through November. Really excellent to see that we're seeing a lot of investment in this sector. What the issue is that Series A companies are really having a tough time raising their Series B. And a lot of times it's because the milestone goalposts have been changed. It used to be, get something into the clinic and you can raise it. That's the metric. Now it's get into the clinic and show me data. And because of that, we're seeing a lot of these companies getting pushed out, doing insider rounds, and finding a way to try and get their cash burn all the way through 2023. The number of Series B deals are down significantly. The good news is there's a lot of capital out there, but these folks are looking for different milestones from what we thought in 2020 and early 2021, so it's made it a lot tougher to finance. But the deals that are being done at pretty good step-ups. But I will caution you, this data really is looking at the top 5 to 10% of companies that are out there. Those are the only ones that actually can find an outside lead right now. We're seeing some down rounds start to happen, but frankly, most of the companies that haven't met the milestones that these new milestone goalposts have set at are doing insider rounds and pushing those dollars into 2023. On the ophthalmology side, it's actually great to see a number of really big financings out there, both early stage and late stage, a lot of gene and cell therapy focused companies, but it's great to see that activity in 2022. On the investor side, we certainly talked about these late stage investors scaling back. They're not gone completely, they're just doing less deals. But we are seeing a lot of late stage investors coming into ophthalmology. When you look at Access Biotechnology, Jetto, Deerfield, Gilda, OrbiMed does early and late. Good to see these folks being focused on getting into these bigger ophthalmology plays. And I think it's great to see the number of those funds that are listed there all have new capital to deploy. So it's great to see that focus in ophthalmology. Onto the device side, what's interesting is we continue to see late stage device be pretty aggressive. Early stage is down. Late stage, it's actually up in Q3 over Q2, really being led by non-invasive monitoring. That's really being the push here. We're a sensor-based technology that's sort of connected on the health tech side into the cloud, and able to monitor these patients. But even on the ophthalmology side, significant progress in focus in this arena. Up to $411 million have been invested into new ophthalmology deals just in 2022. And if you think about sort of the step-ups, the really strong step-ups we saw in biotech are not necessarily being repeated on the device side. And you can see certainly, as you get into Q3, there's less bubbles there, which means, less deals that are being, an outside-led deal with a step-up we can calculate. And the step-ups that you do see are marginal, but they're above 1, which is great. I will caution that we continue to see a little bit of an uptick in down rounds on the device side. But overall, for ophthalmology, good amount of investment. And we're seeing some really interesting late-stage investors that are traditional venture folks getting involved with a lot of these companies, which I think is great because, one, they understand the venture landscape, and the fact that they're investing in ophthalmology companies, I think, is really good for the industry. And finally, on the device side, for investors, we certainly see a retractment for these late-stage investors that were so active in 2021, but we're seeing a new crop of folks coming in where you have KKR and Deerfield and Marshall Wace and Falcon, which is sort of connected to KKR, all doing these really late-stage deals, sectoral as well. So that, again, great opportunity for ophthalmology companies that are in the later stage finding capital to help support these companies. So onto the exit side, just to give you a sense of what we're seeing. Whoops, I guess we don't have the exit side. But I'll describe the exit side, which is just as good. On the biopharma side, what we really see is the vast majority of M&A so far this year is in the public market. Obviously, ton of IPOs that have happened over the last 2 to 3 years. Those are the companies that acquirers are acquiring. The reason why is because, frankly, one, they're a little bit later stage now than where they were, but two, they're valued true to how investors are seeing those valuations right now. The problem with the private side is you've raised these big rounds at really big valuations, and those valuations are static until you raise again. If you're in the public market, you're trading on a daily basis. So we are seeing a lot more public than private, but over the last couple quarters, we are seeing more of the preclinical early stage M&A that we're so used to seeing in biopharma sort of come back. But the cautionary tale is that those upfronts are somewhere in the $200 to $400 million range, and you see a lot of private companies in biopharma now that are valued at higher than that. On the device side, we had so many different acquirers in 2021, a lot of small and mid caps. Those folks are now refocused on their own company. They're not out there acquiring. I think it's the big folks that are out there acquiring. So I think what's going to happen in 2023, there's a lot of capital out there to finance. A lot of companies will be able to finance. There's going to be some valuation resets. I think we're going to see continued, interest in ophthalmology. But I think, again, this is going to be a tough year for companies that have pushed their financing into 2023, hoping to find a lead for the next round. It's going to be a challenge. But I think, again, the focus is there's never been more venture capital out there. So there is capital out there for the right companies that have hit their milestones. And so, with that as maybe a positive to end the talk, thank you very much for your time. Appreciate it.